Markets lose early gains. Nifty off opening high, slips below the 21,700 mark. Sensex below the 71,900 mark. Broader markets in tandem with the benchmarks. Power stocks continue to surge in trade as draft power tariff regulations propose higher returns on equity on new storage-based projects. Private lender HDFC Bank sees slow growth in its Q3 deposits. The bank adds over 41,000 crore worth of deposits in the December quarter. Fintech company Mobikwik has filed a draft with the market regulator SEBI for an IPO worth 700 crore rupees. And an NDTV exclusive. NDTV speaks to Tamil Nadu Industries Minister TRB Raja ahead of Global Investors Meet 2024 to be held in Chennai. Says Tamil Nadu will see a good hit rate in investments this time around. Good afternoon and welcome. You're watching Market IQ on NDTV Profit. I am Hersh Sayta. Quick check on the markets. Well, the Nifty opened higher, but we've seen a bit of a cool off since. If we can quickly have the graph for the Nifty to indicate where it's at, it's currently just below the 21,700 mark, up 0.1% or thereabouts. After yesterday's gains, not a bad day if we close this way. So no complaints on the benchmark front. Let's quickly also have a look at the index constituents, what's really gaining, what's losing on the Nifty 50 index. And within that, you see the likes of at least the contributories. You see the likes of a TCS, Infosys, L&T, ICICI Bank really aiding the Nifty. HDFC Bank, and we'll come to that part of the market and what's happening within the banking pack. But HDFC Bank is definitely the top drag. 38 points, which is more, almost 2/3 of the negative contributories on the Nifty is contributed by HDFC Bank, and that's really been the drag in trade today. If we exclude HDFC Bank, the market's probably up 70 points. Therefore, nothing to complain about in that sense. Also, let's have a quick look at broader markets. Broader market indices outperforming the Nifty 50, and that continues to be the theme of 2024. The Nifty mid cap is up as well as the small cap up at roughly 0.5% or thereabouts. Among sectors, and if I can quickly highlight the Nifty Bank here, around 0.25% down. Again, the drag being HDFC. You also have the likes of the Nifty Pharma, which is down around 0.5% thereabouts. The Nifty PSU Bank is also lower in trade today. Among those gaining, 0.7% on the Nifty Auto. The Nifty IT index has stood out today. 1% plus gains on the Nifty IT index, and that was very indicative of the way in which the Nifty was shaping up as well. TCS and Infosys both among the top 5 contributories on the Nifty index today. But that's where we are at with regard to the benchmark and the markets. Quickly on the central, and speaking of sectors, power has been in focus since today morning. The likes of a GE Power reaching life highs. The CERC, which is the Central Electricity Regulatory Commission, in its draft tariff norms for FY25 to 29, has raised the return on equity for new storage-based hydro projects. We have with us Vikas joining us. Vikas, give us some perspective on this. How should one read into it?
Yes, right. Basically, we reported in the morning also that most of these power stocks have now started to perform well, especially because the incentives or the ROE for especially thermal power projects have been kept unchanged at 15.5%, whereas for storage-based hydropower projects or related projects, it has been increased to 17% from 16.5%. So this was not anticipated. Basically, the street anticipation was that this will be cut. The ROEs will be cut because it's an important component for tariff determination. So if it is cut, the tariffs would also come down. But that hasn't happened. On storage-based projects, it has been increased because the government shift is also now moving towards green fuel-based power generation. So that's going to kind of help or boost these kind of power projects. And for thermal also, government has shown the intent that now it wants to continue with these existing thermal power projects as well as focus on green power projects in coming years.
Right. Thanks so much for that perspective, Vikas. Of course, the power sector, a buzz. Can we also have the graph of something like an NTPC? The way in which some of these power stocks have moved has indeed been absolutely stellar. That's, of course, the intraday graph. But if we can have the last 3 to 6 months to try and show as to where NTPC has really gone, look at that. That's a phenomenal graph, nearly doubling up over the last 12 months or thereabout. But let's quickly move on. HDFC Bank, Q3 deposits up 2%. Also, 5% growth in advances. Pragati is here with all of the details, the entire roundup. Pragati, take it away.
Thanks, Hersh. Well, you're absolutely right. HDFC's headline numbers for the third quarter are out, but the reaction that the market has given is not entirely positive. Clearly, we are seeing the stock's performance as well. Let me give you a quick roundup of the numbers that we have in front of us. The total advances are up 5%, and even the screen is flashing these numbers for our viewers. The gross advances are up about 4.9% quarter on quarter, and if we see the deposits, they're up about just 1.9% quarter on quarter. So clearly not a very big shift or a great upsurge if we see in terms of quarterly basis. If we see the domestic retail loans, they grow about 3%, and the commercial and the rural banking loans grow about 6.5% quarter on quarter. But the corporate loan segment, once again, the growth was relatively slow, as it was just about 2% quarter on quarter. CASA is one factor that we are definitely looking at across banks for this quarter, because considering the last 2 quarters, the way they have been, CASA is definitely something we are looking at, because the bank's ratio is stable at 37.7% and expanded just about 10 bips. And overall, if we look at CASA, it's just grew about 2.2%. And interestingly, right after the numbers or the headline numbers that came out, there were a couple of analyst reports that also came out that relayed very similar sentiments as the way the market is also reacting, that we can see in the stock also. Now, one of the reports that Bernstein came out with is that the loan growth, and they said it verbatim, that the loan growth is average at best. And as far as the deposit growth grows, which is another very important metric, especially for this quarter, it is healthy and relative to peers. But Bernstein is also expecting a positive surprise on the margin front, and that is something we are waiting to look at this point. And once the actual numbers come out, we will definitely come up with a detailed analysis of how they are looking like. But Harsh, interestingly, we also spoke to Rahul Malani, a banking analyst, and here's a quick look at what he had to say about the numbers.
We continue to maintain a positive stance on HDFC Bank with a 12-month price target of around 1900. We believe that overall in calendar year 2024, we should see in the overall banking sector seeing some reduction of pressure on the overall ROA. But versus HDFC Bank would be one of the bank in the largest private bank space, where we should see improvement in the ROA, which should help in re-rating the valuation multiples.
Right. That was, of course, Prakati. Thank you so much for that roundup on HDFC, followed by Rahul Malani on his views with regard to the numbers. But very quickly moving on, one sector that's been in focus continues to gain despite a 7% rise on the Nifty Realty yesterday, continues to gain 4.57% higher today as we speak as well. Pretty much all the constituents on that index in the green. Sobha, of course, was up nearly 15+% yesterday, so saw a little bit of, or seeing a little bit of profit booking as we speak. But other than that, that one is in focus. And again in focus today because of the Q3 updates. We've got 2 companies with Q3 updates. Anushi is here. Anushi, give us perspective on some of those numbers.
Right. So 2 companies in focus today are Macrotech Developers and Sobha Limited. So starting off with Macrotech, the company reported a pre-sales growth of about 12% at rupees 3,410 crore, and it guided that its 9-month FY24 pre-sales reached a level of 10,300 crore, on track of the guided 14,500 crores for FY24. However, it was the collections that were down by about 3% at rupees 2,590 crore. While the company did report an intraday high of 9%, it did reverse in early day gains and is about 0.5% up. Now, coming on to Sobha Limited, it achieved a 37% pre-sales growth at rupees 1,952 crore, while the average price realization was also up by about 15%. The company also stated that it has launched 2 new residential projects in Q3 FY24, measuring about 3.83 million square feet. As you mentioned, Hersh, some profit booking over here, while the company did enjoy a phenomenal run yesterday on the back of the strong business update and the other yesterday's also performance. So that was on the realty stocks today.
Right. Thank you so much for that, Anushi. We also have the likes of Hindustan Aeronautics, which is buzzing in trade today. It's a stock in focus because UBS has an initiating coverage note on the stock. Target price 3,600. Now, let's give you a little bit of perspective here. If we can have the 1-year chart of HAL, it's up 3% today. But the last 1 year, the stock has been a 3-bagger. And when I'm looking at it since 2020, the stock has been an 11-bagger. It's created massive amount of wealth, especially given that it's a PSU stock. And the target price of 3,600 further gives it a 20% upside. So, Mahima is joining in to talk to us about what UBS is really catching on with regard to HAL. 20% more upside, Mahima. Talk to us about what is UBS really suggesting in its note.
Right, Hersh. So as you rightly mentioned, they've initiated buy coverage for HAL and they've given a target price of 3,600. As you rightly mentioned, it's a 20% upside. Now, they've backed this on multiple reasons. The first one being that HAL's military aircraft, they have a monopoly in the military aircraft and they have faster capability of building up these aircrafts combined with significant policy push and robust domestic supply chain. They've also mentioned that sharpened policy focus will lead to a compressed opportunity of $60 billion in the next 5 to 7 years. And also they see that new orders will see material step up and revenue will grow at a CAGR of 16%. Moreover, they expect higher local content and lower staff costs that will support the EBITDA margins of HAL. And they also believe that the own design manufacturing will drive the double-digit EPS CAGR and their ROE will grow at 20%. Now, they also have mentioned that they set a target of their order book which will triple in the next from FY23 to FY26 and they've also mentioned that they re-rate by a similar magnitude to BHA in the past decade. So overall, if you see, as you rightly mentioned, HAL has been a multi-bagger since past 2 years. This is a very good initiative buy coverage by UBS on HAL.
Right, very strong buy coverage on HAL. Thank you so much for that, Mahima. Also, very, very strong order book, right, that HAL has. Around 80,000 odd crore is the current order book standing. There's no reason why the stock shouldn't buzz. The only possible downside or risk currently within the HAL system is execution. That's always been where the challenge lies. But this time around, it seems UBS is positive even with regard to execution that HAL will do. What they are seeming to suggest is that the next 5 years will see much more attraction with regard to execution given the urgency that the government has with regard to investments in defense. And that will probably continue to keep HAL in focus over the next couple of years at the very least, and of course order pipeline being extremely strong. But let's take a very short break on the back of that. More on the other side, of course. Stay tuned to Market IQ. Welcome back. You're watching Market IQ on NDTV Profit. I want to quickly mark out GAIL. We've had news trickling in that Vitol has signed a long-term LNG supply deal with GAIL. You can see a spike on the stock, 2% higher as we speak. Vitol is set to deliver LNG from the global LNG portfolio of Vitol, and it's a 1 MT per year LNG supply deal for 10 years starting 2026. On the back of that, you're seeing a bit of a stock reaction on GAIL. I also want to check out what Power Grid is up to. I haven't seen that, but there seems to be an order win with regard to Power Grid as well. And if we can have a bit of a spike there as well on Power Grid. But let's switch focus to macros. Let me try and break down what the services activity is reflecting within the economy. Seems to have picked up in terms of growth momentum for the month of December. At least that's what the PMI data is indicating. Pallavi is here to break down some of those numbers. Pallavi, give us some perspective.
Hi, so like you mentioned, services activity does appear to have seen some pickup in momentum in the month of December. The HSBC India Services PMI rose to a 3-month high of 59 in December. That's compared to a print of 56.9 that we saw in the month of November. Now, the increase was largely led by output. To just understand this data better, typically a print above 50 indicates expansion. So favorable economic conditions as well as positive demand trends are likely to have pushed up output. On prices as well, the interesting trends that were seen in this data print, input cost inflation was at a 40-month low. Despite that, output prices still rose. And that's likely to translate into better margins for corporates for the month. Composite PMI that comprises both manufacturing and services also increased to 58.5 from a print of 57.4 in the previous month, and this rise is likely to have been led by services.
Right, thanks so much for that. We'll switch focus from macros to IPOs. Mobikwik has filed a DRHP for its IPO with SEBI. Company plans to raise roughly 700 crore via a fresh issue of shares. Rishabh is here to give us all of the details on that one. Rishabh, take it away.
That's right, Hersh. Mobikwik has filed for its IPO. I've just got my hands on the draft red herring prospectus. It is a 700 crore rupee IPO. It's a pure fresh issue that we're seeing. There's no offer for sale component. We reported yesterday that they have filed a resolution for a 880 crore IPO to raise about 880 crores, but we're seeing a reduced downsized IPO by Mobikwik. As I get a better read on it, there will be a 140 crore pre-IPO placement component to this as well. So if that gets fulfilled, the fresh issue size will reduce further. What we're also seeing is that the proceeds from the issue, they've detailed in the DRHP, about 250 crores will be used to fund the financial services business. About 135 crores will be used for the payment service businesses. Another 135 will be used for investment in their data, machine learning, artificial intelligence forays. And another 70 odd crores will be used for capital expenditure for their payment devices. So, for example, sound boxes or POS devices, they'll use another 70 crore for that. So these are some of the details that we're seeing coming in as we get deeper into the DRHP.
Right, thanks so much for that, Rishabh. And again, we'll switch focus from Mobikwik IPOs to a crucial development in the tax space. With regard to benefits for foreign investors in India, the Supreme Court of India has issued an interim stay on a Delhi High Court ruling. The ruling pertains to TRC, which is Tax Residency Certificate, which is a key document for foreign investors claiming tax advantages under bilateral treaties between India and other countries. Countries like Mauritius, Singapore, and the like. We have with us Varun, who's joining in with all the details and what it means, because it's a crucial new development, right, Varun?
Yeah, It is a crucial development since foreign investors might be now staring at uncertainties with respect to benefits under a double taxation avoidance agreement, as the top court has issued a stay on a position that a valid tax residency certificate is sufficient proof to claim tax benefits under a DTAA. Now, a TRC or a tax residency certificate is a document issued by the contracting state indicating a taxpayer's residency. Last year, the Delhi High Court had reaffirmed this position that Indian tax authorities can't go behind a valid tax residency certificate to deny capital tax exemptions as provided under the India-Singapore DTAAs and the other DTAAs as well. Since in this case, the court was dealing particularly with the case against Blackstone Capital Partners, the High Court said that the revenue authorities cannot question the sanctity of a valid tax residency certificate. Now, the High Court's decision came on the shoulders of various CBDT circulars, press releases, legislative amendments, and various other judicial pronouncements as well. Since the top court's final decision in this matter is yet awaited, experts still believe that this stay shall not only lead to uncertainty regarding tax outcomes that foreign stakeholders were earlier assured of, but would also act against the circulars and court decisions that reaffirmed that a tax residency certificate is a key document for treaty eligibility.
Right, Varun. Right. So, of course, we'll keep our eyes glued on that one crucial development where FIIs are concerned. But quickly moving on, Tamil Nadu is gearing up to seal investment deals worth more than 5 lakh crore rupees as it hosts its third edition of the Global Investors Meet in Chennai on the 7th and the 8th of this month. NDTV's Sam Daniel spoke to Tamil Nadu Industries Minister TRB Raja on the number of deals and the changing image of the state. Listen in.
The number is going to be huge, and the message, I'm sure, is going to be bigger. This time around, you will see that the world has recognized Tamil Nadu in its place as the most favored destination for investors into India. Tamil Nadu will also showcase itself as the knowledge capital, as the talent capital of India.
Are we looking at 3 lakh crore?
Stop prodding me, Ram. But that's for the chief ministers to say. I can only say one thing. This is going to be the biggest ever global investors meet, and this would be the most meaningful one also.
In the last 2 editions of GIM, the claims did not really translate into real investments. This time, what's the strike rate you're looking at, and what kind of jobs, what number of jobs these investments would churn?
This time around, in this global investors meet, we have made sure that all the investments that come into Tamil Nadu are first. All the investments, the investors have been thoroughly studied. We've seen if they can provide the jobs that they are promising. We've seen that if they can provide the kind of infrastructure for the working atmosphere, for the workforce that they're going to take up. We have also seen if the land is going to be properly utilized in its entirety for that purpose. And we've also seen, to an extent, their financial capabilities also. So this time around, I think we're going to see a very good hit rate when it comes to investments converting into proper investments on the ground and providing jobs.
Any number of jobs you can share with us these investments will churn, and what kind of jobs are we talking about?
Okay, lakhs of jobs for sure. Again, no precise number. That's for the 7th and 8th.
Right, stay tuned for more coverage on that count as well. But that's all the time we have on the show for you today. One quick note which I want to flag off. Nomura has come out with its note suggesting a Nifty target of 24,260. We'll discuss that note in more detail on the closing show, so stay tuned to NDTV Profit for that. But with that, we're completely out of time. From the entire team who puts the show together, as well as myself, thanks so much for watching. Continue to stay tuned to NDTV Profit.